Let's get some business news for you now. Kate Moody's with us in the studio. Hi there, Kate.
Hi, Laura.
We're going to start with the US-China trade deal. President Trump hailing it as a momentous agreement. That deal signed today in Washington.
Righting the wrongs of the past, according to the U.S. president, Laura. It was a long and fairly self-congratulatory introduction to a deal that marks a truce in the trade war that's seen the world's two largest economies impose tariffs on billions of dollars worth of each other's goods. Bilateral trade dropped by $100 billion, while global economic growth has been stunted by the tensions. The agreement has been described as a ceasefire, which will see China increase purchases of American goods by some $200 billion, including $40 to $50 billion worth of agricultural produce. Many of the existing tariffs will remain in place, while negotiators launch talks on the Phase 2. Many of those existing tariffs being kept on in order to ensure that the commitments are indeed met, to enforce those commitments that have been made. Critics saying that some of the most complex issues, including Chinese government subsidies, have now been pushed down the line to be tackled in that second phase of talks. But the U.S. president hailed a new era in relations. Take a listen.
Today we take a momentous step, one that has never been taken before with China, toward a future of fair and reciprocal trade as we sign Phase 1 of the historic trade deal between the United States and China. Together we are righting the wrongs of the past and delivering a future of economic justice and security for American workers, farmers, and families.
Earlier, I spoke to Mickey Levy, chief economist for U.S. and Asia at Berenberg in New York. He says the deal is in many ways a victory for the Trump administration.
Apparently, and according to the China news agency last month, the agreement will go way beyond trade and tariffs and include issues on intellectual property, foreign investment and foreign companies doing business in China. So it is set up to be rather sweeping, and this doesn't just come out of the blue. Every U.S. administration since the Clinton administration in the 1990s have been trying to achieve some breakthrough on China on issues of trade and intellectual property, and those have not come to fruition.
Let's check in on the day's trading action now. Wall Street hit new records across the board. The Dow Jones clearing that 29,000 mark, hoping for its first close above that level. The Nasdaq and S&P with slightly more muted gains this hour. We saw a mixed close for the major European indices earlier in the day. The CAC 40 and DAX each below the flat line. Germany reporting its weakest pace of economic growth since 2013. The London-listed Tullow Oil continued its fall. It was down a further 16%. This Wednesday. Moving on to some of the day's other business headlines now. Shares of the U.S. retailer Target have tumbled 7% as it reported disappointing sales for the holiday period. The chain cited weak demand for toys and electronics and said it was facing a challenging market. Orders for Boeing planes have slumped to their lowest level in 16 years as the 737 MAX crisis continues to take its toll. After cancellations, the company booked orders for just 54 planes in 2019. Even that number, though, is unlikely to be delivered because of the collapse of India's Jet Airways. And the boss of British Airways has criticized the government's decision to rescue struggling regional carrier Flybe. Willie Walsh has complained to the UK Transport Ministry of a misuse of public funds. Flybe was rescued on Tuesday after its shareholders agreed to invest more money. Amazon has announced $1 billion investment in India to help small and medium-sized businesses sell and operate online. But retailers have organized demonstrations in some 300 cities to express their opposition to the behemoth's growing influence, as Sad Bradpiece reports.
Amazon's quest for global domination continues. The richest man in the world is on a mission to win round India.
Hello, everybody. We're going to invest an incremental $1 billion in digitizing small and medium businesses. And thank you.
Bezos faced a frosty reception during his 3-day visit to the country. Amazon has been active in India for 6 years and as of Monday faces an investigation from the country's Competition Commission. Alongside US-owned competitor Flipkart, it is accused of breaking the law. promoting preferred sellers and pouring billions of dollars into online discounts that undercut traditional traders.
They just want to wipe out the competition, and later on they can dictate their own terms.
Amazon is a dominant force in Indian e-commerce, employing 6,000 people and having invested $5 billion in its operations there. But this is not enough to placate protesters, who claim that Amazon have already destroyed tens of thousands of small businesses. The Competition Commission, which last year fined Google $21 million for abusing its dominant position, said it will report on the case in 60 days.
Another controversy for Amazon there.
All right, Kate, thank you very much indeed. Kate Moody there with the business. Let's get